With the US trade war heating up and recession clouds darkening the horizon, could our mining sector, could it become a safe haven in your portfolio? Hold on to your seatbelts, folks. This is going to be a good one. The Canadian mining sector, particularly gold, is poised to shine brighter than ever amidst escalating economic tensions. Historically, gold has been the go-to safe haven asset during those turbulent times. And right now, we're facing a perfect storm with rising US tariffs, a looming recession, and a whole heaping helping of global market uncertainty. These factors create an ideal environment for gold investments, positioning Canada's gold miners for a pretty significant breakout. Our mining sector, rich with gold reserves, is uniquely positioned to capitalize on that ongoing US Canada trade conflict. As trade barriers intensify, investors are increasingly fleeing traditional markets and turning to commodities like gold as a safe haven. The reason is that gold typically performs exceptionally well during economic downturns because investors, they view it as a stable store of value. The reason is that gold typically performs exceptionally well during economic downturns because investors they view it as a stable store of value and a hedge against both inflation and currency depreciation. Canadian gold mining companies have proven resilience in past economic downturns, consistently, very consistently outperforming other sectors. With operations mostly insulated from the direct impact of US tariffs, these companies are strategically positioned to thrive, even if the broader economy struggles. Gold's historical performance during recessions further highlights its value in defensive portfolios. For instance, during the 2008 financial crisis, gold prices surged by more than 50%, while equities suffered steep declines. Today, with the threat of recession becoming increasingly tangible, allocating capital to gold-related assets provides investors with critical diversification and risk management. A sub to the channel is your hedge for future content. For today's list, I was looking for mining companies with huge exposure to gold and with proven track record of returns over the last 3 years as well as into the crisis we now find ourselves in. Today's list was sorted by their 1-year total return, so without any further ado, let's do this. Kicking off our list at number 5, we have Dundee Precious Metals with a ticker of DPM. They are a Canadian-based international gold miner with primary operations in Bulgaria and a smelter in Namibia. They focus on high-margin, low-cost gold production and, they also have strong sustainability practices. At the time of recording, their price is coming in at $18.92, and they have a market cap of $3.39 billion. Their beta, not too bad, 1.06, and their earnings per share come in at 1.90. Their price to earnings ratio, 9.96, and they have a return on equity of 20.21%. I do like that one. Their return on assets coming in at 10.98%. When it comes to their debt to equity ratio, they've got almost no debt. Look at this, 1.05%. Looking at their dividend, they have a yield of 1.209%, quarterly dividend of 4 cents USD per share. Their payout ratio, 11.85%. Switching to their returns, on their 3-year return on investment, that's coming in at a very nice looking 157.77%. Factor in those dividends, we get a total return, 166.49%. On their 1-year return on investment, 80.53%. Add in the dividends, total return, 82.73%. Looking at their 3-year annualized, that's coming in at 38.64%. Boy, we're off to a great start for sure. Let's keep going. Number 4 on the list, Agnico Eagle Mines with a ticker of AEM. They are a leading Canadian gold producer with mining operations in, of course, Canada, Finland, and Australia, as well as Mexico. They are known for a strong focus on low political risk jurisdictions with a history of consistent gold production. At the time of recording, these are the expensive ones on the list today, $163.42. Their market cap, $82.22 billion, and their beta coming in at 0.86, making them a little bit less volatile than the market average. That earnings per share number, 5.33, and their price to earnings ratio, 30.66. Looking at their return on equity, that's coming in at 9.42%. Return on assets, 6.41%. Looking at their debt to equity ratio, another low one, 6.16%. Switching to their dividend, they do have a yield of 1.389%. That's a quarterly dividend of 40 cents USD per share. The payout ratio on that, 42.33%. Switching over to returns, their 3-year return on investment, that's coming in at 122.55%. Add in the dividends, we get a total return of 131.40%. On their 1 year, we get a return on investment of 94.83%. Adding in those dividends, total return 97.47%. That 3-year annualized, 32.27%. Once again, this is another really good looking company. Let's see if we can keep it going. We're going to take a look at number 3, and we have the Kinross Gold Corporation with a ticker of K. Kinross is one of Canada's largest gold producers, primarily focused on gold production through open pit and underground mines. Their portfolio includes operations and projects in the US, Brazil, China, and of course Canada. At the time of recording, their price comes in at $19.93, and they have a market cap of $24.52 billion. Their beta coming in at 1.37. Their earnings per share, 1.09, and they have a price to earnings ratio of 18.28. That return on equity, 15.08%, and their return on assets coming in at 8.32%. Looking at their debt to equity ratio, it's a little higher, 20.75%, but that's still not too shabby. Onto their dividend, they have a yield of 0.861%. It is a quarterly dividend of 3 cents USD per share. Payout ratio on that, 15.58%. Looking at their returns, on their 3-year return on investment, that's coming in at 155.19%. Factor in those dividends, we get a total return of 161.33%. On their 1-year return on investment, 129.08%. Adding in the dividends, total return 130.92%. They've had a pretty good year. Their 3-year annualized, that's coming in at 37.74%. Whew, yeah, and these numbers are still getting better. Let's move on. Let's move on to number 2, and we have Orla Mining Limited with a ticker of OLA. They are a growing gold mining company focused on the development, exploration, and operation of mineral projects. Their flagship asset is the Camino Rojo mine in Mexico, which began commercial production in 2022. They also have exploration projects in Panama as well as the US. At the time of recording, their price was coming in at $14.79, and they got a market cap of $4.77 billion. That beta 1.54, and their earnings per share coming in at 0.38. Their price to earnings ratio 38.92. That return on equity 19.60%. Return on assets 17.72%. This is another one that has very small debt. Their debt to equity ratio 0.43%. Now this is the only one on today's list that does not have a dividend. So looking at their returns, on their 3-year return on investment, it comes in at 174.40%. Looking at their 1-year, 173.89%. Holy banana bread, that's pretty good. And we still got one better. Oh boy. On their 3-year annualized, that's coming in at 40%. All right, let's jump to number 1. I can't wait. It's Lundin Gold Incorporated with a ticker of LUG. Lundin Gold, of course, is a gold mining company focused on the operation of its Fruta del Norte mine in Ecuador, one of the highest grade gold mines currently in production globally. We're talking the world. Oh boy. This flagship asset, they began commercial production back in 2020. So at least something good came out of 2020. At the time of recording, their price was coming in at $48.85. They've got a market cap of $11.76 billion. Their beta coming in at 1.09, and those earnings per share 2.48. Their price to earnings ratio 19.70. Looking at their return on equity, oh boy, 39.23%. I love that. And the return on assets, Another impressive number, 26.27%. All right, looking at their debt. Nope, nothing, nada, no debt, zero. Love it. They also have one of the higher yields on today's list. So their dividend yields coming in at 3.54%, quarterly dividend of 43.2 cents per share. Payout ratio on that, 34.09%. All right, let's look at their returns. On their 3-year return on investment, that comes in at 368.36%. Factor in those dividends. Total return, 388.07%. All right, let's look at that 1 year. That return on investment, 168.11%. Factoring in the dividends, good enough for tops on the list today. A total return, 174.57%. Their 3-year annualized, also nice looking number, 69.63%. That's pretty darn good. And I know we've seen them before, and it makes me wish I had bought them the last time I highlighted them for sure. The theme of this list here today is all about securing your portfolio and mitigating that risk. And maybe even striking some financial gold in Canada's thriving mining sector. I do really like these 5 stocks, and in these uncertain times, gold is becoming a beacon of stability. As that trade war deepens and recession signals intensify, it very well may be time to explore gold as a hedge. If you are interested in any of the stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on Hamilton's Champions ETFs, and I will see you in the next video.